Kitco News special coverage of PDAC is brought to you by Gold Mining and Uranium Energy Corp.
2022 was a tough year in the junior resource space. Have we recovered? We're here at PDAC 2023 in Toronto, and we're joined by Kai Hoffman. Kai, of course, is the founder of Soar Financial and also the CEO of Oreninc, a company that follows the Canadian financing activity in the mining sector. Kai, welcome.
Fantastic. Thanks for having me on.
We saw equity investment, including exploration, cut virtually in half from 2021 to 2022. How is 2023 shaping up so far?
It's a mixed bag of cats, quite honestly. 2022 wasn't as bad. The numbers, don't lie. We're down 33% roughly versus 2021. 2021 was a record year. Only beaten by 2011 actually, and that was the height of the market. So quite surprising to see those high financing numbers, but I think what we're getting in return is not much because there's not a lot of love for junior mining companies in general in the market. We raised $4.2 billion last year. We're already sitting at close to $700 million this year, which is fairly high. We've had a really good start to the beginning of the year. A lot of bigger financings come in, like the developers have been raising money, late stage explorers have been raising quite a bit of money. That's positive, but the juniors, like the early stage explorers are struggling still. The market is not there for them. So that's what I mean by a mixed bag of cats. Also depends a bit on the commodity. Copper gold projects and lithium projects are having it a little easier right now than just pure play gold and silver companies.
Okay. We're also obviously seeing persistent high inflation. The Fed has been hiking rates steadily, and markets are now expecting rates to remain higher and for longer. How does that impact the juniors in particular?
Big time. I didn't expect it personally to happen or to be as important, like the Fed rate hike cycle, to the juniors as it has become. Back in March last year, March 16th, I think was the day of the first rate hike by the Fed. And since then, the wallets had been shut until the mid-November of the year. Right? That's when the market started to sniff out a potential Fed pivot or the end of the rate hike cycle. But what's the famous saying? Don't fight the Fed. We tried to fight the Fed. We tried to be smarter than the market, and we're being punished for it right now as the markets are, did a complete 180 again. Gold ran $300 up to $19.50, I believe, and now we're back down $150 to $1,800 or $1,850 actually today. We recovered a little bit the last few days, but it hasn't been positive overall. So. And the correlation is quite interesting. And now we got to wait probably a couple more months until the Fed signals things might change again. But inflation is still high, so it's still sticky, as to quote the newspapers and mainstream media. It's not going away. And personally, I don't see it going away, and I don't see it going back to 2% anytime soon, unless something drastic happens. And that's not on the horizon. So we got to fight that negative sentiment for a while now.
And what about growth expectations? How do growth expectations, we're looking at the prospect of persistent high inflation, potentially for years, and we're also looking at the possibility of a recession. How does that impact the junior resources?
It's tough because it'll drive the cost base up, right? And if gold doesn't move higher, the margins are shrinking, making gold investments just not lucrative. Right? And gold doesn't pay a dividend like the physical metal, but the miners do. But if their margins are shrinking, they're cutting dividends, and we've seen that already. And that's not positive. I think Newmont just cut their dividend also as well in preparation of that potential Newcrest merger. And that's weighing heavily on the sector. Why would you invest if your dividends are being cut or you don't get any yield at all?
Yeah, well, speaking of these mergers, we're seeing a lot of M&A activity continuing, particularly in the gold space. Is this bullish for the juniors?
It can be. I still hope, or as a junior mining investor, I still hope that the mega merger between Newmont and Newcrest goes through, maybe at a higher valuation, but it means that more money might come back into the market. Let's assume it's a $20 billion takeover. That's money that could get reinvested into the sector. That's very positive. So I hope that happens, and that could be bullish for the sector, because try to allocate $20 billion in the mining space, that's a big chunk of change that needs to find a new home, and it won't just go to the majors. Some of it might trickle down all the way to the juniors, and that has me positive. Some of the other ones, I think we still need to see a bit more consolidation. We're still at very low valuation, so I understand that on the junior level, we haven't seen as many mergers. I think there could be more if A, egos would get out of the way, and B, valuations would change. But if, for an example, if you were trading at $1 last year, you wouldn't accept a merger at 30 cents right now, right? And a lot of companies are sitting on that valuation gap or metric right now, and they're struggling with that. and boards are not approving like terms like that. It just doesn't make any sense, and you come out of a deal like a loser. Nobody wants to look like a loser.
Right. Of course, nobody wants to buy something for way more than it could be worth in a few years either.
Exactly. So that's the trade-off. You got to see, like, if 1 + 1 does equal 3, the famous saying, right? Maybe you get a new CEO on board, or you get a super smart VP exploration on your team that can help advance it, or maybe a management team that has access to capital. That's what I mean by ego. Like, are you smart enough to step out of the way at some point, or are you smart enough to understand that 2 + 2 = 3, even with a lower valuation, and that could, excel the deal or your project further?
Right. Another thing that we've heard is that it's an advantage for the biggest mining companies to acquire these junior miners, because in an environment where it takes so long to get a mine online, it takes so long to begin to produce. One of the ways that they can show growth, one of the ways that they can show progress, is by buying up the juniors. Is that good for the juniors? Is that good for the juniors sector overall, or is that not necessarily as helpful as it could be?
It's one of the exit strategies, right? A major coming in. I think that's everybody's dream here on the floor at PDAC. That I know there's a lot of corporate development teams walking around, sniffing around, seeing what's going on, what story is hot, what do the rocks look like, especially here at the core shack. So I think that's everybody's dream. Right? The majors will have to do it at some point, but a lot of focus is on internal growth, meaning brownfield exploration around existing mine sites over the last few years. So they haven't bought a lot, like unless it made a lot of sense or just an adjacent license. But they haven't stepped out, I'd say, out of their little box much lately. Like Kinross the only one who sort of stepped out, got beaten up by the market for buying Great Bear at probably too high of a price potentially, and the majors are cautious.
Right. Yeah. If one steps out and makes a move like that, the others are going to sit on their hands for a little longer.
Exactly. Right. They're scared because they see the market reaction, and they don't want to get punished for it either. They want the acquisition to make sense, and we've seen in the past, like they overpaid for assets in the past, and they had to reduce their debt for years and years on, and there was no love lost for them in the market.
So, are we seeing any trends emerging between metals, say precious metals versus base metals?
We are, and it's definitely trending towards the base metals right now. Gold copper projects are being loved by the market. It's just that optionality with copper as well. There will be a supply demand gap at some point, depending on what research statistic you want to believe in, what year that is. But it is trending that way. Like just with the electrification and the goal of reaching carbon net zero, you have to electrify the world. You need copper for it, for example. So that's pushing it higher. Lithium is the flavor of the month, it seems here. Everybody seems to have a pegmatite project in Quebec these days. Interesting, but I don't think we'll need that many. It's more the refining capacity as well. And some of them will succeed, obviously, but that's where some of the money is going. That's what the numbers tell us also at the beginning of the year, that quite a bit of the money is flowing towards the battery metals. And fun fact, like on the TSX Venture, top 5 companies, or 5 out of the top 10 companies are lithium companies in terms of market cap right now on the TSX Venture.
Okay.
So
that's where the interest is. Well, speaking of copper and the battery metals, you wrote a Twitter thread addressed to Elon Musk about copper supplies. Elon thinks the copper supply is fine. What is he missing?
That's a good question. Like I'm looking at it, it's like I look at the whole infrastructure, right? Not just the the batteries that you need copper for, but the whole infrastructure. If you want to build superchargers around the globe, they need copper wiring to be, added to the grid. You need that. Or home storage is a big factor as well. And he talks about trucks and electrifying shipping fleets and all. Yeah. They need storage capacity. And copper is a big part of that equation. Nobody really has the numbers on that. Like there's a lot of guesswork involved. And my guess is that he's wrong actually on it, which is like, he's easy Elon Musk. Like I think he's got a few more IQ points on the docket than I have, but I'd love to see the math behind it. I think that was more the challenge. Happy to believe him, like if there's a case for it, right? So that was more of the challenge.
All right, just basically show me the numbers, show me the work.
Show me, exactly. Like happy to believe, but show me.
What else is on your radar for 2023?
That's a good question. I hope the gold juniors are doing better, but it's all under the macro umbrella of what is the Fed doing? And there's other geopolitical events we have to watch that are trickling down on the junior space. So watching closely what's happening in the copper space in that regard, and just gold in general. I'm in for a bit more pain personally. Like I'm prepared for it, because if we look back at March 2022, we've been in a world of pain for 8-9 months before we got a bit of a glimmer of hope at the end of the year. So I think it'll be a couple months before we see that glimmer of hope again.
Okay. And are you hosting Deutsche Goldmesse again this year?
We are really looking forward to it, May 5th and 6th in Frankfurt. A small boutique event, 35 companies, 6 keynote speakers, free to attend for investors, and get some great speakers coming out. John Reed of the World Gold Council, Alistair McLeod of Gold Money, just to name a few. Really looking forward to hosting that again, because I think it'll broadcast or showcase quite a bit of information. And in May, we'll know more where we're standing and where the Fed is standing.
That's great. Well, thank you so much for talking to us today, Kai.
Thanks for having me on. Appreciate it.
I'm Ernest Hoffman for Kitco News. Be sure to subscribe below and stay tuned for more coverage from PDAC 2023.
Kitco News special coverage of PDAC is brought to you by Gold Mining and Uranium Energy Corp.